Michelle on the big stage. Now, accountants, as you know, are known to be boring people. This is not quite accurate, and I'd like to correct this misconception. Accountants are people who are interested in some boring topics. It's a very subtle distinction. You got to think about it, for a few days. Okay, so I wanted to, in this talk, address one or two misconceptions a lot of people have about the tax system, and then explain how some people can save tax using a C corporation. Let's see. Okay, so here is the marginal rate of tax. What is the marginal rate of tax? It's your highest rate of tax. So in this example, the income here is, well, this line represents $1 above the 25% bracket for a single person in 2011. So the income is taxed $8,500 at 10, the next at 15, the next bracket is at 25, and only that $1 is taxed at 28%. A lot of people think that if they earn too much money, they'll be thrown into a higher tax bracket, and they'll pay that rate on all their income, so they're better off, not making that extra money. That's not the way it works. So you don't have to worry about that. Okay. Here are the brackets again. 8,500 up to 8,500 is taxed at 10. 34,500 at 15. And then above 34,500, it's taxed at 40.3. Remember this number here, 40.3. I'm going to use that as an example. That's kind of a typical, above 34,500. Oh, you got those rates there. But if we're talking about self-employment income, you've got to add on self-employment tax. The 1040 form involves two taxes, income tax and self-employment tax. Self-employment tax is FICA and Medicare. A self-employed person pays both halves, which total 15.3. Here's the C corporation has tax brackets of its own, unlike an S corporation. A C corporation pays tax. And the first bracket is the first $50,000 at 15%. So you begin to see how there's an opportunity here to save tax. If you're paying 40.3% on your income, on your top rate of income, you could be paying 15% with a C corporation on some of that income. And by the way, this strategy I'm talking about is described in this book. It's a famous book, Ink Yourself. 25th, more than 500,000 copies sold. This is actually out of date. We're on the 10th edition. Anyway, it's a very popular book. Okay, so here's how you do it. It's called income splitting with a C corporation. And by the way, most CPAs, or many CPAs, will tell you that an S corporation is the way to go. But I disagree with that in many cases. So in this example, your income after expenses is $70,000. That's what would go on your Schedule C if you were a sole proprietor. But with a corporation, you can take a salary. So, and that leaves $20,000, $50,000 salary leaves $20,000 in the corporation where it's taxed at 15%. So this is up to you. I mean, you can zero it out. A lot of CPAs will do that. They'll take a salary of 7 so that there's no tax. So this $20,000 stays as retained earnings. It's taxed on Form 1120, that's a C corporation tax return. And this $50,000 goes to your 1040, it's taxed on your personal return. Now you say, well, why would I want to leave money in the corporation? Isn't that double taxed? At some stage, I've got to pay 2 rounds of tax. That's what a lot of CPAs will tell you. I should say here, I'm not talking about very profitable corporations, hundreds of thousands of dollars. They're probably better off as S corporations. But I'm talking about modest, people with modest profits. Okay, so what can you do with that cash in a C corporation? Working capital. Working capital, you can think of it as cash. And cash is king, right? That's a famous expression you've heard. Cash is the most important thing to any business. It's the most important figure on the balance sheet, either that or working capital. And that's what we're talking about here. So, you can pay down debts. Loans payable, including shareholder loans, loans you've made to the corporation, credit cards, accounts payable. What that means is that if you spend, let's say you get carried away with your spending, and you build up a credit card balance, and you can't pay it off, you're paying interest of 19%. You can pay down that balance with money taxed at 15% instead of money taxed at 40.3 in my example. That means that cash flow is better for the C corporation. That's a big deal, in my mind anyway. You can also pay your federal income tax with that cash in the corporation. If you're a sole proprietor, you've got to pay it with money tax at 40.3%. But here you pay it with money tax at 15%. You can also possibly make a larger retirement contribution. You've got more cash to do that with. A C corporation, you get a much better medical deduction because as a sole proprietor, all your medical is reduced by 7.5% of your adjusted gross income. And that's a big number, adjusted gross income, that's your total income. So it's normally wiped out completely by that reduction. And here's a very important point. A sole owner without employees is not subject to the anti-discrimination rules. If you've got a corporation with employees, you've got to do for them what you do for yourself. If you're paying all your medical through the corporation, you've got to pay all their medical. And you probably don't want to do that. But a sole owner corporation, he doesn't have anybody to discriminate against. It's not a problem. He just pays all his medical through the corporation and gets a deduction. Another advantage of having a corporation is you're far less likely to be audited. Because when you're a sole proprietor making, say, $100,000, you're a big fish in a small pond. And the IRS doesn't like sole proprietors. People ask me, well, is the home office a red flag? Is this a red flag to the IRS? Schedule C is a red flag to the IRS. They consider that an area of abuse. And they go after Schedule C much more than other returns. It's roughly, well, it's greater than 1%. It's not a high number, but there it is. It's much greater than other returns. With a corporation, you're the small fish in the big pond, and you're very unlikely to be audited with a corporation. Okay, there is one fly in the ointment, and that certain people are not allowed to split incomes in the way I'm describing. And those are these people: lawyers, accountants, health professionals, doctors, dentists, performing artists, conducting dum-de-dum. And here's the biggie, consultants. If you call yourself a consultant, then you fall in this category. However, if 5% of your activity is not personal service activity, you can get out of this problem. This is an anti-avoidance provision of the Internal Revenue Code. That means they're stopping some people from employing this strategy because, I think it's because they view that these businesses don't require capital to run. But I don't really agree with that if that's what it is, because, as I was saying before, cash, any business needs cash, and you need, ideally, a lot of it. $50,000, $100,000 in the bank would be wonderful, so that you can, weather, a rough patch. But which businesses can benefit with a C Corp? Insurance agents and brokers. They're selling a product. They're not providing a service. Real estate mortgage agents and brokers, sales and manufacturing reps, financial planners, and then a whole bunch of other businesses. Too many to list. Okay, here's my contact information. Paul Alpert, CPA, DBA 1040 Land.
Great name.
Thanks. Info at 1040land.com. Telephone number there. Here's an interesting quote from a judge by the name of, it's got a strange name. I've been trying to come to grips with his name for years. Learned Hand. Anyway, he said, anyone may arrange his affairs so that his taxes are as low as possible. Nobody owes any public duty to pay more than the law demands. If you could refer me any business, I pay 15%. 15% of what I charge the person, I'll pay to you. $300, I'll pay you $45. Oh yeah, when you have a corporation, people worry about, well, I got to keep minutes of the meetings and the cost of the corporation. It's not expensive. I can form a corporation very cheaply, a one-person corporation. The minutes are a trivial issue. I can show you how to do it. Thank you very much. Thank you so much, GNA, for allowing me this opportunity to speak. I really appreciate it.